Are you wondering why you keep losing money in options trading, even though it feels like you're doing everything right? The truth is, most traders are making the same 7 mistakes. They don't even realize it until their account is gone. So, today we are going to be breaking down those mistakes. And most importantly, we're going to be showing you how to actually fix those. So, you definitely want to stay until the end so you can make sure that you got all of this down pat before your next trade. My name is Chrissy.
And I'm George.
And we have been teaching these in our mentorship with our current students. We just seem to notice a trend that's been going around. And that's why we want to stop it. So we're going to go
Mhm.
over these trends with you guys today. The first one we're going to talk about is over trading and revenge trading.
A lot of people, when you first come in and you take a loss, you always feel like
Mhm.
you want to make it up. You feel like you need to make that trade up. What ends up happening, you start trading more and you end up losing more than you're supposed to. Revenge trading is not a good thing because what always end up happening is you'll always end up losing.
Exactly. You lose one, and next thing you know, you chasing like three other trades just trying to make up that loss. That's crazy. For George and I, a lot of you guys who've been following us know we have a max of 3 trades a day. And this is a way for you to fix it. You put a limit on yourself. So
Yeah.
for us, we said no more chasing, no more revenge. We set a limit of 3. God forbid something does happen on your first trade, you still have 2 other opportunities to trade.
The thing for us is, and this comes off of experience, so that's why we could talk about these things. Because I used to overtrade. I used to make 11 trades a day for what I don't know why, more than you're sitting around a computer. And the more you try to, the more trades you make is the opportunity for you to lose more.
Yes.
Versus you find the perfect setups. And when you find those setups, you take those instead of trying to make a trade when there's no trade. So for me, I saw that taking 3 trades for the day, I'm more profitable than if I take 5 or 6 trades or even 11 trades.
Yeah.
Those days are the days that I gave back profit or end up losing. So what I do now as far as trading is if I do 3 trades, my max trade is 3 for the day. If my first 2 trades are good, there's no need for me to do a third trade if I'm happy with my profits.
Exactly. Just set a max loss. Like if I lose once for the day, I'm done. If I lose two, I'm done. That's really dependent on you as a trader. The second mistake is ignoring risk management, right? No stop loss at all. You don't know, are you risking too much? Some people over leverage. Some people put, this is a bad thing to do. You put 50% of your whole account in there. And when you trade like that, you get a sense of anxiety
Yeah,
and
you
you're not
automatically know.
you're panicking, you're sweating, you're praying to God that that trade come back because 50% of your account is tied up.
I'll say something. If you put in a trade and you are sweating when you place that trade, you are sweating, you're anxious, your heart is beating fast, you're not comfortable, that means you're over leveraged.
Yes.
That means that your account is over leveraged. So at that point you need to scale back on your trades. Over leveraging, you lose money real quick because now that means that you're trading with 100% of your account, you're trading with 50% of your account. That's going to be harder for you to build back from. So I always recommend when you're trading, know that if you're trading with a certain account size, maybe give yourself a certain amount of chances, whether it's 10 chances or 20 chances. Now, with options trading looks different when it
Yeah.
comes to risk management. You'll hear people say only risk 1 or 2% of your account. But if you have $1,000 in that account, 1% looks like $10. 2% is $20. You can't find contracts for that unless you're doing zero DTE and you wait until the last part of the day, or you're going way out of the money to trade contracts that you can get killed on. So you have to know what you're doing, know your max risk that you want to take on, something that you're comfortable with. But in a sense, options trading look different from futures. Futures, you could know exactly how much you're going to lose because you put in a take profit and a stop loss. With Forex, you know exactly how much you're going to lose because you don't have theta working against you. With options, your contract changes based off of time and theta, right? Those are 2 things working against you. So when you're saying, you know what, I'll only risk 10% of my account or 10% of what I traded with, the thing is, when you go in that trade, you might be already down 5% because of spreads. So you have to pay attention to those and say, if I trade, I'm trading based on a setup. And when you trade, you know, where is my stop loss? Where is my take profit? Where those things have to be in place. So if you know that the trade goes wrong, you get out automatically.
So keep that in mind. So the next mistake number 3, is jumping in without a plan. We wanted to take a quick break and say thank you guys so much for watching this video. Did you know that 80% of the people that are watching this video are not subscribed? And you might be one of those people just as well. And if you are, do us a favor and click that subscribe button and join us on this journey. Watching this video, that means you might be interested in options trading. I'm not sure if this is for you, but I wanted to let you know that George and I have a 6-week mentorship called Married to the Markets. We'll be teaching you everything about options trading and holding your hand throughout this process. If that sounds like something that you would be interested in, make sure you pause this video and check the description because we're going to be putting all the information that you need and to see if you're qualified for this. So if this is something that you want, we would love to have you guys in the Married to the Market family. So guys, let's go ahead and jump back into the video. Not having a written plan. You see green candles and you're just jumping in. That's not the way to really do it. When we trade, and this is just an opportunity for you guys, know where your entry is, know where your take profit is, know where your stop loss is. You have to always know those 3.
Yep.
Because otherwise, you just trading without a plan and you getting ready to get clapped up from the floor up. So always know what your plan is going to be before you actually get in a trade.
For us, I automatically know where I'm entering. Break off a price or break off a day, break off something, right? And sometimes even when it break, it might be too soon. It might be where it's hitting on something. So I'll wait. But you know that your entry already broke for you to get in. So at the same time, you know when to enter, you know when to exit because you say, based on this trade, if I get in, this is automatically going to be my stop loss, right? So a lot of times people will say, listen, you know what? I'm in a trade. And again, this is options. So you could tell how much you're going to lose on Forex or futures. The thing is, once you get into options, your contracts starting to mess around. If you're trading 0 DTE contracts, this is where you could get chopped up, meaning that you could be down 50% within 15 minutes because if price is getting chopped. Now, once price is getting chopped and it didn't break your level, do you get out? The trade didn't go wrong.
You
So
just didn't have enough time. And I think that needs to be part of the plan as well. So I always tell all of our mentees in the mentorship, take the weekends to chart, right? Figure out what you're going to do. So if this did break your level, then what contract are you looking at? If you say that you're doing Apple, what contract, what call, what put, what is the strike price? What are you doing? I think when you have a well-written plan, it is a lot more easier. It's less stressful, so you know what you're getting into once that does go off.
yeah, if you're taking a trade without a plan, that means you don't know where take profit is and you don't know where stop loss is.
Correct.
If you're taking a trade and you know exactly where you're getting out and where you're taking profit, then that's fine. That's a good trade. But even with me, I know where I'm taking the trade or where it should go, but I don't wait till it get there for me to take profit. I always make sure I'm scaling out, and I always recommend scaling out of your trades because on a pullback with options, you could definitely go from 20 or 50% down to 10% real quick. And by the time it gets to your target, you're only going to get 30%. So those are the things that you have to realize that your contract decay over time. So when price is going into your direction, make sure you're taking profit along the way.
Ain't nothing wrong with taking profit, y'all. Mistake number 4 is trading the wrong time frame. So just using the 1-minute chart. My husband's going to always tell you, are you a scalper? Are you a swinger? It's important to know who you are. But at the end of the day, you need to look at the overall trend, like what is going.
Now, trade alert, right? If you're just starting out trading, don't even look at the 1-minute chart. You're not ready for it. You need to be looking at higher time frames and see what overall market is doing. What some people are coming into is they're learning how to trade and they're learning how to trade off of a 1-minute chart. That's a lot of stress, a lot of anxiety, and that's not the right way to trade. That's for people who are scalping. But even if you're scalping, you still need to understand where the trend is going. If you have a bullish day and you're shorting the market, why are you shorting the market? If the 15-minute candle is bullish, but you're taking a trade and you're shorting on a bullish 15-minute candle because you see the 1 minute is doing something, why are you doing that? That's not right. So you need to look at higher time frames, know what the monthly is doing, know what the weekly is doing, know what the daily is doing, know what the 4 hour is doing. Then you go down to your lower time frame and you say, okay, why am I jumping in this trade?
I agree. So please be mindful. This channel, Married to the Market, is catering and to the new beginners, right? And because mistakes that we've learned, things that we've grown over the years. This is why we come on every episode to educate you. You can learn faster, grow faster, and know that you can do it. Even if you're a busy professional in the world, there are a lot of people that want to trade, right? You have the capital and you're like, man, I don't want to park my money here. I actually want to make my money do something for me. This is why we tell you guys learn to swing trade. That's another opportunity, just trading up of a higher time frame. That's really what that means.
Yeah,
So,
because you have the 9 to 5 people that they would love to have the opportunity to trade, right? And they're saying, well, I can't trade because I don't have the time. Well, you do have the time, right? All you have to do is when you get home, you look
to
over
have
the
a
charts
system,
and you have to have a system in
which we
place.
talked about in our
So,
live podcast. So if you guys missed the last podcast, that one was really good for my busy professionals that are working a 9 to 5 and wanting to trade. I highly suggest you go back to that podcast episode and watch that. We even
yeah.
created a guide. The link is in the bio that talks to you professionals out there wanting to trade. And we send you a couple of emails to guide you throughout the next couple of days. So there's a lot of resources that we do provide. We want to be that helping hand. We want to be the couple that are, working with other couples to tell you that you can do it just as well. There's no difference there. Mistake number 5 is relying on alerts without understanding, right?
I see this a lot. The reason why I do what I do in my live call outs is because I've been into other people's live call outs. I see how it operates. They'll be like, all right, get into this, or we're getting into this. And people are just doing
Jumping
it
blindly.
Do you understand why they're getting in the trade? Do you understand what the trade is? Do you know where the target is? Do you know where the stop loss is? Are you just listening at if okay, he's taking the trade, all right, I'm in the trade. He's getting out of the trade, all right, I'm getting out of the trade. For me, it's a little bit different. I always go and teach, even though I have mentorship for that. I feel like you need to know why you're getting into something. You need to know why you're putting your money in a trade. Every time I get in a trade, I say why I'm getting in the trade, what's the reason for it, where I'm taking it as far as profit wise, where my stop loss is. So you could understand. So even if the trade is down and you might be like, yo, I'm down 30%. Yeah, you're down 30%
But we told you why you
because
were down
my
too.
stop loss didn't hit. And if my stop loss didn't hit, I'm not getting out the trade. A lot of times you get out the trade too quick because there's a pullback. And when you get out the trade,
You
then it
can't
goes in
expect
your
it to go.
direction.
You're going to have people are taking profit at certain levels. So you're going to have those pullbacks. And it's okay. But again, like you said, we explain that in detail in our live call out. So people come in, right? And they say, oh my God, we just love how you guys operate your live call out because it's teaching mode. We're telling you what we're doing, how we're doing it, why we're doing it. And some people just like to have that type of guidance, not, hey, everybody, we're getting in now. And by the time you're getting in, they're getting out. That's not what we do. We're
Yeah.
all getting in together as a team and we're all out.
Crazy thing is a lot of times people get in the trade before.
Yeah.
And when I used to go to other people's lives, they'll call out when they get in the trade. They'll be like, all right, I just got into this. So now everybody is getting in. You can imagine if there's 500 people going into that trade. After them, they're already going to be up. We're looking at this right here.
Together.
Once we break, and I share my screen as well.
See what's
Once we
going on.
break here, then we're getting in the trade.
Correct.
So there's a lot of things that you have to watch out for. Just don't follow anybody blindly. You want to know why you're getting into a trade and what's the reason or when you're getting out the trade. And sometimes it doesn't have to mean that, hey, they didn't say get out the trade yet, so I'm not going to take profit yet. If you see profit and you like your profit, take your profit.
Correct. There's, like I always say, there's nothing wrong with taking profit. And don't let a green trade what?
Go
Turn
red.
red. So mistake number 6, not understanding premium decay, especially on 0DT. Sometimes as a beginner, maybe you should hold off on zero DTE until you understand that, because people see that drawdown and you see your account dip fast. You're like, whoa, but that didn't happen on Apple on Google. It's because your contract is getting eaten up fast. That a contract basically means it expires that day, right?
So zero DTE, it's not for the
It's not for the weak,
it's not for the
y'all.
weak, right? It's not for the weak because in a sense, you can literally be up on a contract. You could get in that trade and be up 20%, 30% in less than 5 minutes, right? So now you're thinking, oh, I'm up 30% and only 2 minutes in. I wonder where this is gonna go. But then the next candle come in and then come right back down and pull down, and now you're down 10%
Correct. Those contracts
in
can go
one,
worthless
yeah,
fast.
in 1 minute. So again, this is the part where I always tell people, when you hit a certain percentage, make sure you're scaling out. Scaling out look different for people, right? Because if you have one contract, there's no scaling out. You have one contract, is either you sell it or you hold on to it. Versus if you have multiple contracts, you have 10 contracts, maybe you sell 5, you hold on to another 5, and as you go up in profit, you're able to scale out and take more profit. But with zero DTE, it is something that moves very fast, and the contracts deteriorate very fast because of one, expiration, two, theta is working against you on those days.
So basically, know how theta works, okay? And maybe avoid zero DTE and leave that until you're a little bit more advanced and comfortable. The next mistake, number 7, is skipping journaling and reviewing, right? We got to remember, no record equals no growth. And because you need to be able to see your progress, what you did good, where you did bad, how you can improve. And journaling is so important. I tell this to all the people in our mentorship. It's a requirement. I'm sorry. In Married to the Markets, it's a requirement to journal, because you need to know, are my bad days on Monday? Are my bad days on Friday? Because you could be profitable Monday through Thursday, and every Friday you're losing your profits. There's a problem. Are you buying same day contract on a Friday? Are you leveraging too much on a Friday? You have to see where you are psychologically. And you could only do that when you
Some people, they're great all through the week. And I'll tell you something, what will mess your week up real quick is going into a Friday knowing that you've been great all week and you're confident, right? And you're like, yo, I'm gonna knock this out the park. And because you've been great all week, you say, you know what, let me get a zero DTE contract, put some size in, and then you lose.
Yeah. Because
And
you're a little
now
too confident and cocky.
all of the profit that you work so hard for the whole week is gone. Do not become victim of that. If you're up from Monday through Thursday, evaluate yourself, evaluate your trades and say, do I need to trade today? Is it a day where I say, you know what, I'm not going to take any trades? Because you don't have to. Not every day you have to trade. The days that you don't trade is also a day that you win because you never gave anything back to the market. Understand that going forward, if you know you always lose on a Friday, maybe don't trade on a Friday. If you know Mondays are tough for you, then don't trade during that time. When you trade, you should be journaling the time you trade, the size that you're trading with, and all of those stuff you're journaling, because if you're trading and you feel anxious, if you feel sometimes, you should be saying everything that you feel and how the trade went. So now you could go back and say, listen, you know what? Maybe I've been oversizing on my trades. Maybe I need to cut back because I feel a certain way. Maybe I don't need to take trades around 11:30 because every time I take a trade around 11:30, my contracts get chopped up. Maybe I don't trade on a Friday because every time I trade on a Friday, I always end up losing those contracts. So those are the reasons why you journal.
And those are the reasons why we created the Married to the Markets journal for the community. And we invite you to check it out. It is in the description or in our bio. It will save you because you're writing in detail. This journal is not just a typical journal with blank pages. We're telling you line by line what is important and why you're putting in those specific numbers. So I highly suggest you guys look into journaling, because that little money that you're going to spend on a journal versus losing thousands to the market weekly, you got to make it make sense. So invest in a journal. This is a 100-day journal. And the reason why we chose 100 days is because by that time, you can look at the overall picture. You need to see a bigger picture. So we realize that 100 days give you a good picture of who you are as an individual, who you are as a trader. You're able to go back 100 days. Can you imagine going back 100 days? I do really good on Apple. Oh man, I do amazing on Tesla. I need to do more of this. So do yourself a favor, pause this video, go into the comments and add that trading journal to your cart right now. I highly suggest it and share it with a friend. If you've been nodding your head and you're saying, okay, I get you, I see those mistakes, don't feel like you're alone. We've all been there,
Yeah.
right? We've all understand what it feels like to experience at least one or two of these. So you're not alone in this process. We've created a little cheat sheet for those of you that are experiencing these 7 mistakes. So click in the description, pick it up. It's a free cheat sheet guide. I'll send out some emails to help you guys throughout the week.
You have to realize when we talk about journaling, if you're an entrepreneur and you're running a successful business, that business is successful because you're tracking certain things. You're tracking your sales, you're tracking your growth, where you need to improve on. If you're running ads, you're not going to just run ads blindly. You're running ads based on what you're getting back on your ROI. So the same thing you're doing with journaling. When you're doing your journaling, you're trying to figure out where is your return on your trades. That's the same factor and that's the same way you have to look at when you're journaling. Because if you're not doing that in your business, I doubt your business is successful. I doubt your business is thriving. If you know that you're running a successful business and you know those things you have to do, why not do it when you're trading as well?
Absolutely. Remember, trading isn't about being perfect, it's about being prepared, right? It's about being prepared for what? That is one thing that Married to the Markets is all about. It's handhelling, it's mistakes that we've learned over the years and now want to teach you guys. So we are offering our 6-week mentorship. We even do one-on-ones where you have to qualify for that. Or you could just click the link, book a call to see if that's something you qualify for. Right now, we are in a 6-week
Yeah.
mentorship. You can just book a call for the next round. We also have the Discord. You guys are watching us on YouTube. So you're getting value everywhere. We're on all social medias. So we don't just put out like funny, no, we're teaching, we're guiding, we're helping. And if you feel connected to George and I, and you're a married couple just as well, wanting to learn how to trade, come over, join us. Everything is in the description. All right, guys. So that was this episode of Married to the Markets. Don't forget to check out our full playlist. We have tons of other videos in there. And otherwise, we'll just see you guys on our next podcast.
Thanks for watching.
Bye.